This is AI Command App News, your daily briefing on the AI and tech stories moving markets and reshaping how businesses operate. It's Wednesday, June 17th, 2026. Here's what business leaders and investors need to know today. How to write Story 1. The AI bill comes due. Story 1. The bill for the AI boom is starting to arrive. Leaked, audited financial documents reported by Ars Technica show that OpenAI is losing billions of dollars a year. Revenue is growing fast, but it's being dwarfed by research, development, and the staggering cost of compute. On its own, one company's burn rate is a footnote, but it lands in the same week that Databricks reported revenue growth topping 80% to nearly $7 billion annualized, while its margins actually shrank, squeezed by what CNBC described as a swarm of AI agents driving up costs. The pattern is the takeaway. AI revenue is real, but so is the cost of delivering it, and right now the costs are winning. For business leaders, the lesson is simple. When you build on AI, model the unit economics before you scale, not after. Hackahard Story 2. AI on borrowed money. Story 2. Wall Street is starting to price that risk. Man Group, one of the world's largest hedge funds, warned today that AI credit markets are at risk of a violent correction and urged investors to stay clear-eyed. That warning isn't abstract. Investors Business Daily reports that NVIDIA and its hardware suppliers are increasingly tapping the debt markets to finance the massive AI data center build-out. And the capital is global. A Canadian pension giant just acquired an 8.2% stake in Control-S, an operator of more than 15 data centers across India. Here's the translation for investors. An enormous amount of AI infrastructure is being financed with borrowed money on the assumption that demand and pricing hold. If they don't, the correction Man Group is warning about hits the lenders first. Hotjagar Story 3. SpaceX passes Amazon, buys Cursor for 60 Bs. Story 3. The most dramatic market move of the week belongs to SpaceX. Days after its blockbuster IPO on Friday, SpaceX's valuation briefly passed Amazon's, ballooning toward $2.8 trillion, a $1 trillion gain in a matter of days, and the newly public company is already spending. SpaceX announced it will acquire the AI coding platform Cursor for $60 billion, a move CNBC says is aimed squarely at competing with Anthropic and OpenAI in developer tools. CNBC's Jim Cramer offered the skeptic's view. Investors, he said, aren't buying SpaceX's earnings, they're buying Elon Musk. For investors, that's the whole debate in one sentence. Is this price discovery, or is it a bet on a person? Story 4. Fed Day under a new chair. Story 4. The macro backdrop. As we publish, the Federal Reserve is delivering a rate decision, the first FOMC meeting chaired by new Fed Chair Kevin Warsh. Markets spent the day waffling, with the Dow drifting and futures cautious ahead of the announcement, even as the SpaceX rally ran on. Whatever the Fed signals about the path of rates matters enormously to every story we just covered, because the entire AI infrastructure trade is being built on the cost of capital. Cheaper money fuels the build-out, tighter money exposes it. Story 5. Labor and policy signals. Story 5. Quickly, the labor and policy signals. Robinhood announced it's cutting 10% of its workforce, and notably, unlike most of its peers, CEO Vlad Tenev made no mention of AI as the reason, which TechCrunch reads as a sign that blaming AI for layoffs is wearing thin with the public. On policy, Anthropic asked Washington for AI regulation, and per CNBC, the Trump administration went much further than the company wanted, a reminder that inviting regulation and controlling it are two very different things. And in hardware, Intel began production of its most advanced chip node, 18AP, inching closer to a possible manufacturing deal with Apple, a potential turning point for American chip making. I'll close. The thread tying today together. The AI story is shifting from how fast can we grow to who actually pays for it. Profitability, debt, and the cost of capital are now the main characters. For business leaders, that means scrutinizing your own AI spend, your vendor lock-in, and your exposure to pricing that may not last. That's your AI news for today from AI Command App. We'll see you tomorrow. Come join us.